Hi there, I'm Arran Anders, one of the online account specialists at Thomson Cooper. What we're going to look at today is the ability to forecast cash flow, specifically by looking at QuickBooks and Xero's solutions. Who could have foreseen what was to unfold in 2020? It was something straight out of a Hollywood blockbuster. I'm sure one word that you're all fed up of describing the year is that it was unprecedented. Never before was the throwaway line, "cash is king," so true. As a result of the pandemic, there were many financial stimulances and reliefs given to businesses, such as the Coronavirus Job Retention Scheme, bounce back loans and local authority grants. As a result of this, many businesses became reliant on their cash flow projections in order to make relevant decisions. As always with the cloud solutions, they evolved and responded. We will specifically be looking at QuickBooks and Xero's solutions. What I will say before we dive into the products is, though, that the products only give out as good as information that's what's put into them. So for example, there's not much point running your cash flow projections if you've not got your bank up to date or you've not got your invoice and ledgers up to date. Before we jump into Xero and talk about its short-term cash flow product, we'll firstly discuss what it actually does. With the short-term cash flow, we'll be able to specifically target or select all bank accounts to predict their cash flows. We can specify the number of days ahead we want to forecast. We can predict future cash balances. And we can switch between bank accounts and projections. Furthermore, Xero will prompt us to do suggested actions to adjust the cash flow. For the purposes of this video, we'll be using the Xero demo company to look at its short-term cash flow product. In order to access the product, we can find it under the Business tab. And what happens here when I click into the short-term cash flow is, because the demo company is just set up with one bank account, it automatically defaults to bringing us through to the graphical representation. Had we had more than one bank account set up on Xero, there would be a screen before this asking which bank account we wish to look at. However, alternatively, this is where you can select which bank accounts you want to look at and filter in between them. Likewise, it's defaulted to the next 7 days forecast, but if we want to look at for the whole month, you could change it to the next 30 days. So what's going on this screen? So up here we have a summary of what the 7-day balance is going to look at. It's got today's current balance. Xero has used the invoice owed to you to figure out what we'll be getting in, when it targets the due dates that we assign onto each invoice. And likewise it does the same for the bills to pay. So as you can see, we've got roughly about £1,600 of invoices we're expecting to be paid in the next 7 days, and it looks like we're all up to date with our creditors, so we've not got any bills to pay within the next 7 days. And this is also further explained down on these tabs. But one area we do have on this screen is it's got suggested actions. So this is when it's looking at both our invoices and our bills and potential dates that we could put in for payments. And if we follow through to add expected dates, it would then take us to the sales and purchase overviews respectively, and then we could mark in expected dates of when items are going to be paid, and then that will update this figure over here. Up the top, we've got a graphical representation of the cash flow over the next 7 days, and as you can see there, we've got a good steady line over the next 7 days. We're not going to have an unexpected drop on the 4th of April, for example, but again, you can see how this could become a useful forecasting tool if we're going to be dropping in finances over a couple of days, and we might potentially be using our overdraft facilities. So that is your 7-day summary of the bank account, and if I just toggle this to 30 days, you can see there, this is where the proof in the pudding is, that you need to have your Xero up to date, because we had 25 items to be reconciled on the dashboard, and all of them were actually after the 7-day summary. So as you can see there, we're not getting any more information out of this report than we were on the 7 days. So again, it reiterates the point as we must be keeping our Xeros up to date in order to get the correct information out with them. And that's a short demo of the short-term cash flow. Now we will look at the QuickBooks Cash Flow Planner. What it does is it gives us a historical view of the cash position of the business, Furthermore, it displays both the cash balance and the total ins and outs of the organisation. It can give us a cash flow projection. It also anticipates future invoices and expenditures. And furthermore, what we can do is we can manually add future events into the calculation. Unfortunately, at the time of recording this video, there were some technical issues with accessing the QuickBooks sample company. As such, I will now show you a tutorial video from QuickBooks to show you their cash flow planner.
This is Mark from the QuickBooks team. The cash flow planner uses your QuickBooks data and connected accounts to help you plan your future cash flow. Let's go over what this tool does and how to use it to get a complete picture of your cash flow so that you can make informed decisions about spending and bringing money in. Let's start by looking at the tool. Select Cash Flow and then Planner. You'll see what your cash flow has looked like in the past over here. This historical view is based on the total cash that has flowed in and out of your connected bank accounts, including your QuickBooks cash account. You can view either your cash balance or your money in and money out. You can also change the time period. And if you go back to your main dashboard, you'll notice that you have access to the same view of your cash flow. Let's go back to the planner and go over the true power of this tool. Over here is where the fun starts. You can see what your cash flow is projected to be in the future. The planner bases this projection on your QuickBooks data and the accounts you've connected to QuickBooks. So the more data you have in QuickBooks and the more bank and credit card accounts you have linked, the better this projection will be. Down here, you can see all the events that are included in this projection. You'll see any future invoices and expenses that you've already entered into QuickBooks, as well as events that QuickBooks predicts based on your financial history. You can edit any of these events to see what they do to your future cash flow. You can also change your projection by adding a future event like buying a new truck. Select Add Event. Then enter the date of the event, a description, the amount, and whether it's money coming in or money going out. Once you're finished, select Save. Now you can see that your cash flow projection has changed. If you see an issue, like a red dip, make some changes to your future events and get yourself back on track. These events are just for planning purposes and don't affect your books, so feel free to try out lots of scenarios. That's it. Now you can start using your planner to see where your cash flow is headed.
If you would like to discuss any of these features in this video in more detail, please see our contact details on the slide. Thank you for watching.